This is Robert Kraft, and I'm your host on SNN.Network. And with me today is Todd Wenning. He is the Senior Investment Analyst at Ensemble Capital. And I'm just really thankful that he's taking the time today to just try and make sense of all that, what goes on, basically. So with that, Todd, welcome back, man. Good to see you.
Thanks. Good to be here.
Great to have you on. So before we get into some of the main bits that I want to talk about today in terms of your blogs and the recent conference call that the firm did on coronavirus, how's the family doing? Everybody safe and sound?
Everybody's safe and healthy. Just trying to keep it that way.
That's for damn sure. All right. Well, with that, let's dig right in. So last week, you guys published an article titled, just pulling it up real quick right here, but basically saying that the game has changed. I believe that was the title. But I really wanted to get into that. What was the thesis here, and tell us a little bit more about this article.
Yeah, thanks. The impetus of the article was I got an email from one of our followers, and they said, has the game changed here? Has, looking at great companies with great management, with forecastable businesses, has that gone away? Has something changed with what we're seeing? This is like a global natural disaster. And so I thought it was a good question. And it reminded me of a quote from one of my favorite shows, The Wire, where the guy asks, the game's changed. And the guy replies, the game's the same, just more fierce, right? Right now, it's super intense. Everything is, really, you're paying a lot more attention to all the news bits, everything coming through the wires, news every day. You're looking at what's happening in Italy, what's happening in China. And so there's a lot of things going through. I mean, our team has had a lot of deep conversations over the past couple of weeks, just going through our portfolio. And, we just came to the conclusion that nothing has changed about what we're doing. Our process remains the same. It's really about coming back to basics and, reinforcing our core philosophy, which is moat management and forecastability.
Mm-hmm. I mean, that's the real big point here that you read in every single investing book. And, I've done a number of interviews now with Meb Faber, a few of these other guys. And really the main thing is it's this idea of going back to basics. But what's funny is that you feel like, with each, I mean, this is, this whole situation, what's going on with coronavirus is singular onto itself. But, there's many different events like this over time, and yet each time it happens, it almost feels like it's a completely new thing that's never happened before. So, to maybe quell some of the fears that our audience may have when they're, looking at their portfolios or looking at potential investment ideas. I mean, tell them what are some of the basics that they should be focusing on, especially in times like these?
Well, right now, our top priority was making sure that our companies can survive financially. I mean, we have examples of recessions and even the financial crisis and 9/11, where travel got hit hard and restaurants got hit hard, but they never saw a complete shutdown before, and that's a big game changer. So in that sense, it's a game changer. But in the sense of understanding the core philosophies, nothing has changed. But in terms of testing your models, this is where having an explicit discounted cash flow model helps, as you can test these assumptions and see, okay, at what point do these companies start to dilute value? Will they have to issue equity? Will they have to get preferred? Will they have issues with their credit ratings? And that's what we're really testing. So we brought down revenues, to the point where we thought the companies could get in trouble, and figure out, okay, are we willing to underwrite this risk? And the answer across our portfolios was yes. But we wanted to make sure that that was indeed the case, because you can't have a company, thrive coming out of this if they are either diluting value or cutting costs to the point where they're hurting the core business. And so that was really what we were after, is making sure that our companies are well suited to invest through this and come out stronger on the other side.
Gotcha. So I remember when we did our podcast interview, we were talking about your Venn diagram. So how have you been able to implement that same philosophy during a time like this?
Yeah, it's really just taking a pause, and coming back to what we believe are the basics. And once we've decided that yes, the companies can survive. This is also a great byproduct of investing in great companies to begin with, is that when times get tough like this, you don't worry quite as much. They're not living on the edge, right? And so it's important to have that kind of behaviorally to approach this more calmly. But then we want to make sure that there's a lot happening right now. I mean, this is unprecedented in terms of what's happening in the economy. We're more interconnected than ever. Travel across the globe, friends across the globe, emerging of cultures in many, many ways. So what we think is going to happen with this is that you're going to have a number of trends pull forward. So things that were taking place slowly, changes that were taking place slowly, are now going to happen a lot faster because people have been forced to change their habits. People are creatures of habit, right? We only change our shopping habits and things like that when we have major events in our lives. And this is a major event in our life. So you think about what people are having to do, like Starbucks has had to really kind of encourage people through their app to do deliveries or mobile orders and pickups. And now that's becoming standard, right? While all this is happening. So we had to ask ourselves with each company, what things are happening that could be pulled forward? What does that mean from the competitive standpoint? And then thinking about what that means for relevance. So one of our core questions we ask with every company we buy is, how likely is it that this company's products and services will be at least as relevant 10 years from now as they are today? And that's a big question to ask.
That's a huge question. And, it actually hits on the next question I was going to ask you in terms of, with all these new innovative, creative ways in which these companies are trying to not just stay afloat, but maybe even create new ways for new revenue streams or new business. I mean, it's pretty interesting to see when we eventually come out of all this, what's going to still be important and what's now going to be like, what, we did pretty well when we had these strategies in place. What kind of weight are you giving to that when you're looking at your portfolio and some of the companies in there?
Yeah, I mean, this is why we believe corporate culture is just so important. It's in times like these where cultures really show themselves. Are you working for a company that's just about the numbers? Are you working for a company that's trying to make the world better and address problems or address issues and come up with creative solutions? One of our portfolio holdings, Massimo, is providing free sensor screening for its Rainbow sensors to any hospital that has the program already loaded in their monitors. So this will help, especially right now with blood transfusions. They have a hemoglobin monitor that will help doctors, anesthesiologists determine whether or not a blood transfusion is necessary. So just we love seeing our companies react positively in times like this, and thinking long term and reinvesting in the business.
Yeah.
And I worked for great companies before, and I've been through crises with them before, and I see what that's been like, and how great things can come of that.
So then my next question is, and this really actually mostly relates to consumer brands, not staples, but consumer brands, is, in previous crises from what you've seen, you see consumer brands are going out there and doing and trying to earn so much goodwill, and rightfully so. We're all in this together. They're trying to do their part. What would you say is then the time to when consumers remember that? You know what I mean? Like where this, where you buy one, they give something away for free. Those types of models. I know that happened before the crisis, but probably there's a lot more companies doing very similar stuff like that, or a certain percentage now is going towards a certain charity. What kind of weight as an investor looking at companies that are doing these things, are you like, okay, well, will this actually result in more revenue? Is it more of a test to the power of that brand? How do you think about that?
That's a really good question. And I think a lot of it is, so much of brands is subconscious, right? Mm-hmm. Going back to nostalgia and things like, I drink a bottle of Coke out of a glass bottle, and it reminds me of having a Coke at my grandmother's house, right? And so these things are all subconscious and deeply complex for each individual. So it's hard to say across the board, but I think it comes back to, did I have a pleasurable moment with this product in a time when I was upset, right? And that might be the trigger, right? Like, did I get a stress relief having a Starbucks coffee or something like that during this? Maybe subconsciously that happens. In terms of companies like Massimo, providing free sensor screening, economically speaking, long term, you hope that doctors will see the benefit from this and start paying for it later on. So we want companies obviously to think about building shareholder value, but we also want them to make sure that they are good stakeholders, right? Or appreciating all their stakeholders,
Right.
and making sure that they can provide value.
Gotcha. All right. So going back to the Venn diagram, I just had one question on one of the circles, and it has to do with moats. What kind of moats have you been seeing being created during times like these? What are some of the things that investors should look at?
Yeah, I think, it really comes back to thinking about the core moat sources. So one is network effects, and really looking at how companies are treating two sides of their network. So are they looking at supporting the demand side or the supply side of their network right now? I mean, we own Booking, for example, and Booking has done a great job supporting its customers like you and me right now. But there's been some frustration on the supply side, the hotels saying, well, you're being too lenient with refunds. And it's really important for a company like Booking to think about, who's going to perhaps be quicker to come back when times get better, and it's the customer. So companies have to make really tough choices right now. Who do you support? Do you support the hotels or do you support the customers? And which one drives that virtuous cycle? And so that's one example of how moat analysis is playing out right now.
Mm-hmm. So you guys, quick transition, really on the same topic, of course. And I think your answer is probably going to allude to some of the things that we said here, but the company just did a coronavirus update for your clients. So just kind of tell me some of the main highlights there of what you've been telling some of your clients out there.
I mean, these are just unprecedented times. We have a highly connected global economy from which we've all greatly benefited over the long, maybe 10 years or so. Think about poverty rates have come down across the world substantially. I mean, we're clearly not perfect yet, but we're having great benefits from globalization, and we're not seeing that happen right now. Everything is shut down. And so we're thinking through, well, what happens on the other side of this? And to us, we are very happy to have the companies that we do in our portfolio because we believe each and every one of them will not only survive this, but come out stronger on the other side. And that's really what we've been talking about extensively over the past couple of weeks, is making sure that those are indeed the companies that we want to ride through the storm with. Mm-hmm. And we want to make sure, kind of reiterate our focus. Go back to basics. Make sure we're very comfortable with the moat, with the business's forecastability, and the management team.
Gotcha. And one last question: in times like these, when I'm assuming you have relationships with management teams, or at least senior members of all the companies that are in your portfolio. How much leeway or communication do you? Because you don't want to overwhelm them, like, hey, what's your plan? Through things like these, what's that communication like with those firms where you're like, okay, just let us know what's going on, or do you just wait for the conference calls?
Yeah, no, I think so. There's a mix, right? So some companies we talk to a lot more than others, and it's really not so much. So the way we structure our portfolio is we wouldn't make it a full size position until we felt like we knew management really well, mm-hmm. right, and understood kind of broadly how they would react in such a situation. So we have a lot of companies in our portfolio that are core holdings that we've been monitoring what they're saying, but we never really had a doubt about how they would perform. We've been very confident in them, and so it's nice to see when those things actually do happen, right? When you get validation of your thesis, and so that's important to us. It's probably a good point to bring up, is that from a portfolio weighting perspective, we give, all else equal, more weight to companies that we understand, that we've followed for a long time, that we can trust management in difficult situations.
Got it. All right, Todd, with that, I'll let you go. Where can my audience go and find more information about you, Ensemble Capital, and intrinsic investing?
Sure. Our website is intrinsicinvesting.com. Our Twitter handle is intrinsicinv. And you can find me personally at Todd Wenning on Twitter.
Perfect. Todd, thank you again for joining me today, and continue, please stay safe, and I'm sure we'll talk soon.
You do the same. Thanks so much.
Thank you.